Hello everyone, let's do a technical analysis for Mapletree Industrial Trust, and this is the chart as of September 2022. And so this is the line chart for MIT, and this is extracted from Yahoo Finance on a 1-year perspective. So you can see that the line chart doesn't really give us a lot of information, right? You can tell that the price action has been kind of a weak going downwards. But I think if you select the candlestick patterns over here, you will get this pattern, which gives you a lot more information, right? You have the green bars and the red bars and the width and the length. So let's see if we can look at the charts and figure out what's happening. I think if you look at it here, it's quite clear that you have lower and lower highs and lower lows. But you can see that the patterns have also kind of consolidated, right? It's now trading horizontally in a channel. So I think it's quite clear that you should just paint the charts as a story of two halves. So if you cover up the second half and just look at the first half, you can see that the pattern is quite clear, right? Especially if you draw the trend lines, so connecting the highs with the highs and the lows with the lows. And remember, right, that for trend lines, you should always use 3 or 4 points to draw the line for confirmation of the trend. So we can look at the trend lines in the first half. You can see that there is a quite clear downtrend of increasing channel width, right? So increasing volatility, and the shock came over here, right, in late 2021, with the inflation in the US and therefore rising interest rates prospects. And you can see that the money really outflowed very fast, right? But after that, if you're in March in 2022 and you just rely on the technical analysis, you will think that the price is gonna keep going downwards, right? But actually not really, because if you remove the blanked out area, you can see that the things really change, right? And this presence of this green bar, bullish green bar, that pierced through the upper channel was really the key thing that reversed the trend, right? And if you look at the tail of the second half, you can also see very clearly, if you look at things from a horizontal perspective, that they have a very, very strong resistance at the 2.7, 2.75 area. You can see that the for the second half of the year, in fact, the whole of 2022, I think, the upside has been pretty much kept by this blue horizontal bar over here. So we'll talk about the significance of this blue bar subsequently in the video. But let's look at this green bar over here and try to figure out what's going on. And if you look at the announcements for MIT for that period, the main thing was, of course, the results announcement, right, for the full year in April, late April. So there was a bit of a pre-positioning of the MIT, I think, from the major funds. In preparation of the results. You can see that the green bar bought up everything, and then things consolidated around here, right, waiting for the result release. And after that, I think there was a bit of a disappointment from the market, and therefore it sold down, right. You can see very clear red bars standing down, right. Not really gapping down, but the presence of very strong red bars indicating a sell down, accompanied by decent volumes, right. And you can see over here is really exaggerated, right. A huge cluster of red bars selling down aggressively to the 2.4 area, 2.4, 2.45 area, when there's a bit of a support and a subsequent reversal. So you can see the bulls and the bears were really fighting out over this area, right. I was looking around for the full year results and seeing why there was a disappointment around the results. It's quite puzzling because the results were kind of respectable. But I guess if you look at the statement by the manager, I think the main thing was just the inflationary pressures, right? That the markets were zooming in on and therefore running away from. On top of course, the rising rate environment. So with inflationary pressures with utilities, I think the REIT has to pay a higher utility bill. Therefore, people were kind of spooked over here. But I can see at the 245 area, there was a strong buying up, sir. So there was funds coming in buying up this area. And you can see subsequently there was the reversal of what's happening over here. So you can see almost a mirror image around this area in June, right? whatever happened over here in red happened over here in green. So there was a reversal of everything, right? And over here there's just green bars going up all the way. But again, as I mentioned, it was all capped at around the 2.7, 2.75 area. So very clear patterns going on around here, right? Sell off, pre-positioning for the results, sell off after the results, then a rebound from value investors. And therefore, everything was kept at this blue bar over here. So let's look at the CMF, the Chaikin monetary money flow. So you can see that better for the better part of the entire 1 year, there's just been money outflow, right? In the first half, it was really the shock from the rising inflation and the rising interest rates. And you can see inflation hitting 7.5% in the US, and things are started to really flow out, right? You can see that the CMF hitting around 0.5 area, which is quite substantial for a decent sized REIT like MIT. So of course, subsequently, if you look at the CPI for the US, hit the 8.5 and now 9. So people are going really bananas, right? And therefore, you see in May, the sell-off really accelerated over here. On top, of course, with inflationary concerns and stuff, so people are really spooked. If you look at the things from a horizontal perspective, things become even more interesting. So instead of drawing trend lines on a diagonal perspective, let's do it on a horizontal perspective. You can see very clear horizontal lines, right? Channels. And in this channel, what does it correspond to? At the 2.85 to 2.9 area, or it represents around a 4.8% dividend yield, right? So if you look at the dividend around 13.8 cents and a share price of 285, you get a 4.8% dividend yield, right? And that corresponds with roughly 10-year yield of 1.25. And at this point, although the 10-year treasuries was 1.25, the forward expectation was 2.5, right? So this was the first horizontal channel representing a 4.8% dividend yield, corresponding to a forward 1-year US Treasury expectation of 2.5%. And this second channel was at the bottom over here, the extreme, right? The dividend expectation hasn't changed that much, but at a 2.45 share price, it's a dividend yield of 5.6%. And the forward expectation of 10-year treasuries at this point was around 3.5%, right? And if you look at this line over here, 13.8 divided by 2.75, you get a magical round 5% level, right? So remember the horizontal blue bar that we talked about just now? So this is the blue bar over here, right? And you can see why this was such a strong strong resistance, right? It's 5%, a magical 5% dividend yield. I think the market is saying something very, very clear, right? That for MIT, in this environment, people think 5% dividend yield is the magical number. They think a yield below 5% is too little to compensate for the risk of rising inflation and rising interest rates. But at the levels around 5.5, 5.6%, there are strong buyers coming in. So you can see just now when we talked about the mirror image in the second half of 2022, once you hit the magical 5.5, 5.6%, people just start coming in, right? Value buyers for the REIT. So you can see things are just kind of moving around in 25 to 30 basis points steps, right? So over here you have one channel 4.8. Over here this channel is 5. Over here this channel is 5.3. And over here this channel is 5.6. So this REIT trading action is pretty much in steps of like a 20 to 30 basis points move, right? 4.8 to 5, 5 to 5.3, 5.3 to 5.6, back to 5.3, up to 5, down to 5.6. You know, this kind of movements, quite the lockstep movements. But the movement was quite interesting because for the entire 1 year, rates have been rising, right? So if you look at some other REITs, actually the share price has been moving down constantly in locksteps. But for this guy, it's not really moving down constantly, right? It's moving down, and then up, and down, up. So it's quite different from some other REITs that is going on in the market, right? The dynamics is very interesting because it's finding support at 5.6 and then moving up, right? And hitting resistance at 5. So why is there this dynamic? I think one big reason is of course the presence of the US dollar denominated assets in the portfolio. So if you look at the King dollar, the US dollar against the Sing dollar, it's moving up for the entire year, right? And this is despite the MES tightening the Sing policy to strengthen the Sing, right? So Sing is strengthening massively against the yen, the euro, the sterling, the Aussie, but against the dollar is still winning out very fast, right? So basically, the 1 year perspective for the dollar Sing is just rallying from 134 to 1.4 area, right? So I think this is one reason why the REIT has been finding such strength around the 5.6% dividend yield support area because of the US dollar. So if you look at the portfolio under management, we have 51% of their AUM in the US, right? So although rates are rising, but the presence of the FX tailwinds for the REIT means that there's some compensation effect, right? Because the dividend that the rental that we receive in the US is in US dollars, and when converted back to the Sing, which is the PNL currency, it's going to be strengthened, right? So I think this is why the REIT is behaving a bit differently from the other REITs. For the other REITs, when rates are rising up, just go down, 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 down. But for this guy, it's really finding some support at around the 5.5, 5.6% dividend yield level. And I think the King dollar is, of course, the main reason for it. So why? Well, it's a bit of a heaven, right? For the US dollar and the Sing dollar, well, it's just heavens, at least from the perspective of foreign exchange. Oh, no euro exposure with the invasion of Ukraine from Russia, and therefore the gas problems, and no China lockdown problems, and no renminbi, right? So I think that's the reason why the dynamic of the REIT has been behaving this way. So interesting levels to look out for at the 2.4 area if things worsen again. So that's the end of this video. If you like what you saw, remember to subscribe.